China hitting back at new U.S. trade sanctions. Commerce Department expanding its list of targeted tech companies, many of those companies making computer chips, and China's retaliated, banning exports of some rare minerals that are used to make the chips. So Doug Flynn's here on this back and forth from Flynn Zito. And again, as I pointed out before the last break, this is pre-Trump, right? So it's not like we had issues with China, and now what do you make of this? And then does it escalate even more when Trump comes in?
It can. I mean, it's retaliatory. They're obviously going to hold back on these minerals that are used for us to make chips that go into like cell phones and cars. And I think about, we had shortages like this during COVID. If you remember, we couldn't source some of the chips, and so it was affecting the new car deliveries and all that. So, they have to figure out ways around it and source materials from other places. But it's China's way of doing retaliation, and they have to look good. It's very important for them in their own country to look good. They can't not respond to what we do. So this is in the current administration. If it continues on, there's other things out there that may happen. I do expect a little bit of the saber rattling to go back and forth until we get some kind of a deal.
You say look good. They call that saving face over there, but that's what they that's what they say, and it is very, very important. I get that. Chips, these computer chips. You and I have talked about it. NVIDIA is one example, but just computer chips in general, especially those used in AI. We're pretty good at that here. I mean, right? We're better than China, or have been for years. Does that continue our dominance in this sector? Is China catching up?
Well, there's definitely companies that use chips from all over the world, and some that are using like Taiwan Semiconductor over there. So, it really depends on where they're from. I think this is what we're trying to do is build up more over here to reduce reliance outside for exactly these kinds of situations, at least from countries that maybe aren't 100% aligned with what our goals are. So that's, I think, where a lot of this is. But yeah, I think more and more companies are figuring out that you can't just go to one place. You have to source in multiple places. If you haven't already done that, you got to get on it.
Another COVID lesson. Now, drum roll, please. Let's do our Tax Tip Tuesday with the great Doug Flynn as we get everybody set for the end of the year. We brought this series back. There it is, Tax Tips. Well, today, what we're looking at is tax loss harvesting. And the first screen here basically says at the top there, take your losses to offset your gains. So go ahead.
Right. Yeah, get out your statements, not your retirement statements. We're not talking about that now. Your non-retirement, your regular investment statements, take a look in there. Do you have any losses? If you have them, you have until the end of the year to book those losses by selling anything that's at a loss. Take that loss. You can use those losses to offset gains. And then actually, if you have more losses than you do gains, if you book them onto the statement this year, you can actually take up to $3,000 of those losses against ordinary income, which is at a higher rate. And if you have so many losses because you have some things in there that really went down, it's hard for people to sell that. But if they do, you keep that loss bucket indefinitely until you keep chipping away at it against future gains, or take $3,000 a year. So you never lose them. It's really important to get in there and take a look. Don't not look. Inside some of these great gains we've had in the last 2 years, you might have had some things in there that lost. Here's an opportunity to clean that out and use that to offset some of your taxes.
No, I get it. But if you have so many losses, you maybe just give Doug your money to manage, because this market's been doing pretty well. And, you shouldn't be losing that much,
Hopefully overall you're way ahead, but
come on.
All the more reason to get in there and take a look.
There's a few clunkers, of course. Everybody has a few clunkers. Now, the second screen actually said the opposite. Take the gains to offset losses and double up on your tax loss strategy. So what do you mean by this?
Yeah, what's great about this is people don't think about this. This is sort of next level. And what it is if you have a bunch of losses, and either you bank them or you have some things in there, and you have some other stocks like NVIDIA or other things that are way up, what a lot of people will do with advice is maybe sell the gain to offset that loss. What that does is it steps up the cost basis on the stock. So if you bought NVIDIA a while ago and it has a big gain, you can offset that with a buy back the same stock immediately and keep, realize that gain. There's no wash sale of 30 days in that scenario. So you sort of step up your gain. And this way, 5 years from now, when there's further gains, you don't go all the way back to the very beginning. You start over in the current year. So that's sort of next level. And then the double up is just that. You can buy the same security and then in 31 days sell it. The IRS doesn't let you keep losses if you buy and sell the same stock within 30 days. So you have to just watch that.
There it is. Thank you, Doug. Tax Tip Tuesday, closing bell time here, top of the hour.